Ever roll a snowball downhill? It's a simple yet fascinating process. It starts small, but as it rolls, it picks up more snow, growing bigger and bigger. That's compounding in action. Just like that snowball, your money can grow exponentially over time. When you invest your money, it earns interest. This interest is like the first layer of snow on your snowball. Then, that interest earns interest too. This is the magic of compound interest, where your earnings generate their own earnings. It's like a snowball effect that grows your wealth faster and faster over time. The more it rolls, the more it accumulates, and the faster it grows. The more money you have invested, the more it compounds. This means that your initial investment, no matter how small, can grow significantly over time. And the more time you give it, the bigger that snowball gets. Time is a crucial factor in the compounding process. The longer your money is invested, the more opportunities it has to grow. That's why getting to $100,000 is so important. It's a significant milestone that can accelerate your wealth-building journey. It's like reaching the top of the hill. From there, your wealth really starts rolling. Once you hit that milestone, the compounding effect becomes even more powerful. This principle applies to any investment that earns a return, whether it's stocks, mutual funds, or other financial instruments, bonds, or real estate. Diversifying your investments can also help maximize your returns and minimize risks. The key is to start early and be consistent. Regular contributions, no matter how small, can make a big difference over time. Remember, even small amounts, invested regularly, can lead to significant growth over time. Just like a small seed can grow into a mighty tree, your small investments can grow into substantial wealth. Think of compounding as your money's best friend. It's a powerful ally that helps your wealth grow steadily and surely. It works tirelessly for you 24/7, even while you sleep. Your money never stops working, constantly growing and compounding, ensuring a brighter financial future for you. Let's play a game. Would you rather have $1 million today or a single penny that doubles in value every day for 30 days? It sounds crazy, right? Most people would jump at the $1,000,000. But here's the kicker, that doubling penny is worth more than $5 million after 30 days. This illustrates the incredible power of compounding. That penny, though small at first, grows exponentially, outpacing even a large sum of money received up front. This is why it's so important to start investing early. Even if you can only afford to invest a small amount, the magic of compounding can turn it into a significant sum over time. So, the next time you think a small investment won't make a difference, remember the doubling penny. Let's break down how that penny turns into millions. It might seem impossible at first, but with the magic of exponential growth, even the smallest amount can grow into a fortune. On day 1, you have 1 cent, just a single humble penny. On day 2, it doubles to 2 cents. Day 3, 4 cents. See the pattern? Each day, the amount doubles, and while it starts small, the growth is steady and consistent. It seems slow at first, but by day 20, you're over $5,000, and it keeps accelerating. Imagine watching your savings grow from a few cents to thousands of dollars in just a few weeks. By day 28, you're a millionaire. Yes, you heard that right, from a single penny to $1 million in less than a month. And on day 30, that single penny has turned into a whopping $5,368,709.12. It's almost unbelievable, but that's the power of exponential growth. This dramatic growth is the power of exponential growth. It's like watching a tiny seed grow into a towering tree, or a small investment blossom into a vast fortune. In the beginning, the gains seem small. Just like a young plant, the growth is slow and steady. But as the base amount grows, the returns become larger and larger, compounding on themselves at an accelerating rate. It's like a snowball effect, where the growth becomes more and more significant over time. Now you might be thinking, that's just a hypothetical example, it sounds too good to be true, right? But the principle holds true for real-world investments. Whether it's in the stock market, real estate, or other financial ventures, the concept of exponential growth can turn modest investments into substantial wealth over time. The key is patience and consistency. So next time you see a penny, remember its potential. With the right strategy and a bit of time, even the smallest investments can lead to incredible financial success. The journey from a penny to a fortune is not just a dream, it's a testament to the power of exponential growth. Start small, think big, and watch your wealth grow. The power of exponential growth is within your reach. All it takes is a single penny to begin your journey to financial freedom. Remember those first few days with the doubling penny? It didn't seem like much was happening. Reaching your first $100,000 in net worth can feel the same way. It's a challenge, no doubt. You're battling your spending habits, maybe paying off debt, and learning the ropes of investing. It takes discipline and patience. But here's the good news. Once you hit that $100,000 mark, things start to change. You've laid the groundwork. Your money has momentum. You're officially in the compounding game, and your wealth starts snowballing faster and faster. Section 5. Breaking the $100,000 barrier. Your launchpad to financial freedom. Hitting that $100,000 mark is like reaching escape velocity. You've broken free of the gravitational pull of debt and financial instability. Now, you're positioned to really accelerate your wealth building. With each passing year, your investments are generating more and more returns. You're also likely earning a higher income and becoming a savvier investor. It all adds up. Remember, $100,000 isn't the finish line, it's the starting line. It's the foundation upon which you can build a secure and abundant future. Section 6. Saving and investing, the dynamic duo of wealth building. So how do you reach that magic $100,000? It takes a two-pronged approach. Saving and investing. Saving is about putting money aside consistently, building a cash cushion for emergencies and future goals. Investing is about putting your money to work, growing it over the long term through the power of compounding. Think of saving as building the foundation of your financial house, and investing as constructing the walls and roof. You need both to create a solid and secure financial future. Section 7. Boosting your income, slashing your expenses, a two-pronged approach. To supercharge your journey to $100,000 and beyond, focus on increasing your income and controlling your expenses. Think of it like this. You can fill a bucket faster with a fire hose, which is higher income, and by plugging the leaks, which means reducing expenses. Look for ways to increase your earning potential. Ask for a raise, learn new skills, or start a side hustle. At the same time, be mindful of your spending. Create a budget, cut unnecessary expenses, and find ways to live more frugally. Remember, it's not about deprivation. It's about being intentional with your money and making it work harder for you. Section 8. Time is money. The sooner you start, the faster you grow. Time is one of the most valuable assets we have, and when it comes to investing, it can be your greatest ally. The earlier you start investing, the more time your money has to compound. Compounding is the process where the value of an investment increases because the earnings on an investment, both capital gains and interest, earn interest as time passes. Even if you can only invest a small amount each month, starting early can make a huge difference in the long run. Imagine the power of small, consistent contributions growing over decades. It's like planting a tree. The sooner you plant it, the sooner it will grow and bear fruit. Let's say you start investing $500 a month at age 25. This might seem like a lot, but think of it as paying yourself first. Prioritizing your future can lead to significant rewards. With an average annual return of 8%, you'd have over $1 million by age 65. This is the magic of compound interest working in your favor, turning your consistent efforts into substantial wealth. But if you wait until age 35 to start investing that same amount, you'd only have around $566,000 by 65. The difference is staggering, and it all comes down to the time your money has to grow. That's the power of time. Time can either be your best friend or your worst enemy when it comes to building wealth. The longer you wait, the harder it becomes to catch up. Don't wait for the perfect time to start investing. There will always be reasons to delay, but the cost of waiting can be enormous. The market will have its ups and downs, but staying invested over the long term is key. The best time is now. Taking that first step can be daunting, but it's crucial. Start with what you can and increase your contributions as your income grows. Every day you delay is a missed opportunity for your money to grow. The sooner you start, the faster you can achieve your financial goals. Remember, time is money, and the sooner you start, the faster you grow. Section 9. Financial freedom, your ticket to a life you love. Financial freedom isn't just about having a lot of money. It's about having choices. It's about being able to live life on your own terms, pursue your passions, and spend time doing what you love. It's about having the security to handle life's unexpected challenges without financial stress. When you achieve financial freedom, you're no longer working for money. Money is working for you. allowing you to live a more fulfilling and meaningful life. Imagine traveling the world, spending more time with loved ones, or pursuing your dream career, all without worrying about money. That's the power of financial freedom.